Tom, always good to have you. We had you a little less than about a month and a half ago, I guess. You were, positive on the banks as you have been. Has anything changed, other than the fact that the stocks obviously have not performed that well over these last few weeks?
Yes. So, unfortunately, the banks have underperformed by 10% or so in the month of June. And it's because the macro thesis has changed some in the near term, which is the decline in the 10-year, I think, in particular. But we still think the biggest forces that will play out over the coming year and 2 years will come back and remain in place, which is improving economy. We do think the stocks will react well to a higher yield in the 10-year. So the big picture is still the same. But I will tell you, the environment has shifted some over the past month with the changes in the yield curve.
Yeah. Let's get specific here in terms of when we sit here and analyze the earnings coming out, we listen to the conference calls. What is it that you're going to sort of be listening for? What are some of the key things investors should be focusing on, Tom, as they go through these earnings reports that we're going to get this week?
Well, so balance sheets are extraordinarily pristine, and we think there'll be some questioning about credit quality, but we think it's really all about revenue growth. And that's the big story here, which is the industry's earnings are really a coiled spring. Plenty of capital that continues to build quickly, unbelievable liquidity, which almost so much so, it's been a headwind to earnings. But all of this is the fuel for future earnings growth. And investors want to know the timing of when that revenue growth is going to start to show up. In our models, we're forecasting by the end of the year, the economic growth will catch up to this liquidity, and you'll start to see it more in the core operating earnings growth. But that's what investors are going to be looking for, number one. The number two is they're going to be looking for a little bit of guidance on the capital return story. The banks passed the CCAR with flying results and terrific results a few weeks ago, but they haven't really gotten into the strategy of how they're going to return that capital. And I believe that investors are going to want to hear a little bit more specifics about that.
Hey, Tom, we've spent a few quarters now talking about market caps of fintech companies that are comparable or in some cases exceeding that of the legacy banks. And occasionally the likes of Diamond will talk about their interest in receiving offers, contemplating offers. Do you think that talk's going to get more explicit, whether or not it's in these conference calls or ones in the quarters to come?
Absolutely. The biggest banks, and especially JP Morgan, are in a terrific position to act. They've got terrific capital positions. They've got healthy stock prices. And there's an incredible convergence happening in financial services between fintech and banking. And I expect to see more of these deals, especially remember, JP Morgan is at the deposit cap. They legally cannot buy another bank. So they're going to have to look for non-banks to do acquisitions, and they've already been doing that. And I do expect to see more.
Shepard Smith here. Thanks for watching CNBC on YouTube.